From Rule 1 Investing, and today I want to talk to you about the differences between day trading and long-term investing. But there's more than one way to approach the stock market, and many different schools of thought exist on how to best make money buying and selling securities. One such method that often gets a lot of attention is day trading. On one hand, day trading is lauded as the best way to get rich quick. On the other hand, there are countless warnings about the dire risks of day trading. With so much conflicting viewpoints around this method of investing, day trading can seem almost mysterious at times. So what I'm going to do here is try to dispel some of that mystery by taking a close look at what day trading is and determining which is better, day trading or long-term investing. So what is day trading? In day trading, a person is going to buy or sell a contract or a stock or Bitcoin in a single day. You're going to move in and out, in and out. And the goal is to take advantage of small fluctuations in price leveraged over large investments in order to make a profit. So day trading can be done on the stock market, but it's a lot more common on Forex, where there's fluctuations that are easier to manage and a lot easier to leverage. Also, more and more day trading is going on with Bitcoin and other cryptocurrencies. Now, for example, consider a security that fluctuates from $100 to $101 in a given day. For a long-term investor, this small temporary fluctuation is almost meaningless. However, if a day trader were to buy $50,000 of this security at 100 and sell it later in that day for 101, they make $500 for the day. Now, this type of short-term profit is definitely alluring. I hear you thinking out there. However, it's also far from a guaranteed result, and the risks of day trading usually outweigh the rewards. Now, here's the thing. I have sat with a day trading expert who makes about $1,000 a day, working 4 hours a day, and I watched everything he's doing. He taught me for a full week. I sat right next to him. I executed the trades. As soon as he executed the trades, he made $1,000 that day, and I didn't make any money. And I'm sitting with him. It was like, you're talking about mysterious. It's just this, some people just have a skill set, right? And I know very, very few people are people that have it. He's, like I said, the 1 in 100 who's really successful with this thing. Most people are not. So look, being successful as a day trader like my friend requires a lot more than just randomly picking some stock and hoping it goes up and down, right? And trying to guess which way it's going. Pro day traders are super experienced. And like I said, about 99 out of 100 of them fail. So they're going to use expensive hardware, software, tool sets, news services. They're going to commit a lot amount of time to really learn how to do it. And unless you do really well, you might never even pay for your training. Okay? So leveraging small fluctuations in price also requires you to invest a lot of money. In the example above, we got our day trader investing $50,000, right, to earn $500. Now, if for whatever reason the price of the security they invested in had gone down after you make your investment, they could have easily been out the $500 and maybe even thousands of dollars more. By the way, day traders use a lot of leverage, and Warren Buffett states this over and over and over again, that leverage is where you go to die. Happens to be the truth with businesses, happens to be the truth with day trading, and it's definitely the truth in your own personal life. So finally, day trading is an addictive form of gambling, so watch out. Just like any other addictive form of gambling, it can lead to really terrible results in the long run. In fact, Ed Looney, the executive director of the Council on Compulsive Gambling in New Jersey, likened day trading to crack cocaine. He said that this is the most addictive form of gambling in the world today. So be very, very careful about getting involved in it. Long-term investing, on the other hand, allows you to manage your risk by evaluating companies you're investing in, finding an edge, buying them at the right price, and being very confident that in the long run, you're going to make money. Day trading doesn't offer any such risk management and no edge whatsoever. In fact, for the average person engaging in day trading is a lot more like putting money on a roulette wheel than it is to any kind of actual investing. So even for the top 1% of day traders like my buddy, these are people that have the hardware, the software, the experience, the funds, the connections, the leverage, all of that. The risk is still extreme. and the losses can very well outweigh the gains. And just to put that in perspective, he never has more than $15,000 on the table at any one time. Point made. There's no doubt some day traders do very well. Well, so do some blackjack players. So if you're truly interested in using the stock market to safely grow your wealth over time, you need a way to count the cards. You're going to be a lot better served by investing in great companies, finding the edge, holding onto them for the long run, using that edge for cash flow, and allow them to grow the value every year that passes by, and you end up with a great retirement. For sure. A lot better than risking it every day. Now, I'd love to hear from you. Have you tried day trading, and what was your experience like? So leave a comment below with your answer, and I'll be sure to follow up with you. Thanks for watching, and now go play.